Okay, let's get right into it. The global markets are telling a really fascinating and honestly a very contradictory story today. On one side, we're seeing some serious warning signs flashing for stocks and currencies. But on the other, assets like gold are just smashing through all-time highs. It's really a tale of these powerful opposing forces, a great divergence that we're going to unpack right now.
So let's start with those warning signs. After an incredible 7-day climb that added a mind-boggling $16 trillion to market value since April, the S&P 500 finally hit a bit of a wall, dipping 0.38%. Now, this isn't a crash by any means, but it is a clear signal that caution is starting to creep back into the market.
And at the same time, over in the currency markets, the Japanese yen is really feeling the heat. The US dollar is now hitting 152.70 yen, which extends its decline for a 5th straight day. That's an 8-month low for the yen, and it's a major move we'll be digging into in just a moment.
But then, on the complete flip side of this divergence, there's this. Gold just did something truly historic. It smashed right through the $4,000 an ounce barrier for the first time ever. It's now up over 50% this year alone. I mean, that's a huge signal that investors are running for safety.
So this is the big question, right? Why are we seeing this dramatic split? We've got stocks and major currencies like the yen that are starting to stumble, while the ultimate safe haven, gold, is just surging to record highs. What's really behind these powerful opposing currents?
Well, to answer that, here's our game plan. We'll explore how today's markets are being split by politics, shaking up currencies, some new economic red flags, tech's big trillion-dollar question, and of course, gold's record surge. Then, we'll take a look at what's coming up next.
First up, let's talk politics, because major political shifts in Japan, the US, and France are sending some serious shockwaves through the currency markets, and it's a key reason for the instability we're seeing right now.
Now, this table really lays it all out, doesn't it? It shows the direct line from a political cause to a market effect. In Japan, the unexpected victory of Sanae Takaichi has kicked off what traders are calling the Takaichi trade. It's a bet on more aggressive money printing policies, and it's hammering the yen. In the US, the government shutdown is creating that classic risk-off mood. And over in France, political instability is putting direct pressure on the euro. And this quote just perfectly illustrates the Takaichi trade. Her win has caused the market to completely rethink what the Bank of Japan is going to do next. The probability of an October rate hike has just plummeted from over 60% a week ago to about 25% today. That huge shift in expectations is the main fuel for the yen's sharp fall.
All right, so let's see how all this political sentiment is translating into cold, hard numbers. Some alarming new data just dropped confirming there's some real weakness under the surface, and it's coming straight from Europe's biggest economy, Germany.
And here's the proof. German industrial production for August didn't just miss forecasts, it completely fell off a cliff. We're talking a staggering 4.3% drop month over month, so much worse than the expected 1% decline. And a massive part of this was an 18.5% plunge in auto manufacturing. That is a huge blow to Europe's largest economy and a clear red flag for global growth.
Okay, shifting gears, let's look at the tech sector. The AI boom has really been the engine behind this recent $16 trillion market rally, but now it's sending some very conflicting signals. We're seeing both incredible optimism and some emerging concerns at the same time.
On the side of optimism, we have this massive number. Elon Musk's AI venture, xAI, is raising a staggering $20 billion in a new funding round. And get this, it even includes an investment from the chip giant NVIDIA itself. This just shows the sheer scale of capital that's still flooding into the AI space.
But here's the reality check. Right next to that huge funding news are reports that Oracle's cloud business, a key player in the AI world, is seeing thinner profit margins than a lot of people expected. And that single report was enough to spark a pullback in tech stocks. It's raising that trillion-dollar question: when will all these massive AI investments actually translate into sustainable profits? So, let's recap. We have political risk in Japan and Europe, economic fear coming out of Germany, and profitability questions in the tech sector. So where does all that uncertainty lead investors? To the ultimate safe haven. Let's look at gold's historic rally. This timeline really captures gold's role as a kind of barometer for global anxiety. It broke $1,000 after the global financial crisis, $2,000 during the pandemic, and $3,000 amid trade war fears. And today, with the combo of a US government shutdown and all this global uncertainty, it has officially crossed the $4,000 mark.
And we don't have to look very far to see why. As the influential investor Ray Dalio points out, gold is the classic diversifier. It's the one asset that tends to do really well precisely when other parts of a portfolio, like stocks and bonds, are struggling. Today's market action is just a textbook example of this exact principle.
So, that's the story of the Great Divergence so far. But what comes next? Let's pivot and look at the key events and indicators that are going to shape the markets in the days ahead.
Taking a look at the economic calendar from investing.com, the most critical event on the horizon is, without a doubt, the upcoming release of the FOMC meeting minutes. This is going to give us a crucial look inside the Fed's thinking on interest rates and inflation, and it's almost guaranteed to move the markets.
Now, to help us track the mood of the market, there's a great tool called the Fear and Greed Index. It takes 7 different indicators, everything from market volatility to junk bond demand, and boils it down into a single score from 0 to 100. It's a really quick way to see whether fear or greed is the dominant emotion driving investors.
And that brings us to our final thought. The market is perfectly balanced on a knife's edge between the fear we've just discussed and the greed that's still driving that AI boom. With the Fed's minutes looming large, the big question is, which force is going to win out? Thanks for watching. Don't forget to like and subscribe.